Good morning, traders. It's 8 a.m. Chicago time on Monday, the 21st of July, 2025. Thanks for joining me. Let's start with a quick mic check. If you can let me know how my mic volumes are, that would be great. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So we're going to jump right into the pre-market summary sheet by Convergent Trading, where we get kind of the overview of the market. I don't want to spend much time on this. Quick few minutes. Little low. Okay. Let's get that taken care of. All right. Cool. Okay. Just 1 second. Seem to be getting feedback. So what do we have here? We have mixed markets. Really, the Russell is shooting up this morning, up 56 basis points. Volumes are quite low. The relative volume is at 60%, relative range at 70%. Again, the RN, RVOL, this is what we're looking at right here. These are comparing the current action versus where we are in this moment of time versus this exact same moment averaged over the last 20 sessions. And you could see what's hot, what's not. Actually, the blue is where we want to pay attention. We're seeing movement in gold, silver. We're seeing a lot going on with the yen as a result of the ruling party losing this weekend. The exit polls for the ruling coalition are way down, and they're likely to lose control. So the Japanese yen is moving. Verizon pre-market earnings: Verizon, Cleveland Cliffs, and so on. After the close, Steel Dynamics, Crown Holdings, and others. This morning, what's significant? What are the themes? Canadian PPI higher than expected. The Fed's blackout period starts, and it goes on till the end of the month. U.S. Treasury Secretary Bessant says trade talks are moving along. Is more concerned with high-quality deals than getting them done by August 1st. U.S. Commerce Secretary Lutnick said he's confident of a deal with the EU and that President Trump's absolutely going to renegotiate the USMCA. EU envoys set to meet as early as this week to formalize retaliation plan in an event no deal scenario with the U.S., according to Bloomberg. Japanese PM Ishiba vowed to stay on despite exit polls showing that ruling coalition lost its majority. What's up for this week? Tonight, we are getting the RBA, the Reserve Bank of Australia's meeting minutes at 9:30 p.m. Eastern. We have Fed's Chair tomorrow, Fed's Chair Powell tomorrow at 8:30 a.m. We have the existing home sales out of the U.S. at 10 on Wednesday. Thursday's got quite a few releases, high-tier releases in it. Thursday's got the German GfK consumer confidence. We have the German manufacturing PMI flash. Great Britain has its global manufacturing PMI flash as well as services. And then we get the ECB meeting on Thursday morning at 8:15 a.m. Eastern, press conference at 8:45. And then we finish up the week with Great Britain's retail sales at 2 a.m., and then the IFO business climate at 4 a.m. on Friday, and durable goods on Friday at 7:30. So that's what we have. Looking, one of the things you want to note on Mondays are the rotations. These are the 1-minute rotations that we use to size our stops in various products. These get updated every Sunday. and posted to Convergent Trading members, and they're included here for your consumption. Pay attention to these as and the little marker there tells you if the rotations are going down or they're moving up or they're staying stable. This gives you a clue as to the volatility of those products over time. And again, we use those to set our stop sizes. This is what we call harmonic rotation. This is the noise zone. So anything at 5.25 or below, 5.25 points or below in the S&P is inside of that noise zone. The S&P right now is in a multi-distribution profile, quite thin. 86,000 contracts traded, very, very low. The inventory is 89% long. The range is also quite low at 24.75 points. Let's take a look at the charts. Oh, by the way, while I have you here, really important to note that this Wednesday at 3:15 Central, 3:15 Chicago time, 4:15 Eastern, we have our AMA. The topic for this AMA is going to be funded versus self-funded trader. We'll talk about how those two compare and take any questions related to funding evaluation programs, and whatever questions you have about that, we'll address those. I know many people have gone through these funding evaluators. I don't like to call them prop shops because they're not prop shops, but they're funding evaluators. We'll talk about that on Wednesday, 3:15 Central, 4:15 Eastern. You'll see the link for that. We'll shoot out. I'll retweet the link for that registration when I have it. Okay, let's take a look at the charts. So we want to take this top down. First thing is just looking at the relative delta. Relative delta in the S&P has been kind of teetering. We're at plus 1,400 since the market opened. The NQ looking very different. The NQ has a negative relative delta and has been sitting underneath its full session VWAP, whereas the ES has been above. So there's a little bit of a disconnect there between the two. The ES has been holding above VWAP pretty well and is now testing below. Crude oil, we have a negative delta there, and crude is well below its VWAP and is holding steady in what looks like a bear pattern, a bear flag pattern. And then gold is taking off. You can see it's holding above its VWAP, but gold is interesting in that it is rising on a strongly falling delta. What does that mean? What does that mean when the market is rising on a falling delta? Very important to note that that's happening. There's some strong potential opportunity in there as a result. Essentially, the market is moving up on thin air, and someone or some participants or many participants are selling gold as it rises. So as it seeks higher prices, there's some liquidation or hedge that's going on aggressively. They're hitting the bid. That's how Delta gets negative. They're hitting the bid on the way up, and that's going to clue us in on the fact that this price is not being supported by Delta. We want to see price and Delta move in the same direction. Okay, so what we have here for crude, we have price coming off, and you can see there's collisions there. Price is coming off with Delta going down. That makes sense. I expect crude is most likely to resolve to the downside at some point. Crude just opened in the pit session. We'll see how that plays out. So we've marked that ES positive, kind of teetering on an even delta. NQ negative delta, NQ below VWAP, crude below VWAP, negative delta, but gold positive above VWAP in price, but negative delta And you can see that in gold, there's very little, very large lot participation. This is mainly controlled by small lots, small lots. And we know we separate the small, large, and very large with the statistical study we do once a month to look at tick data and determine what sizes, what the sizing is. Let's take a look at the bigger picture here. In fact, let's widen out to the weekly. You can see here, this is quite a bullish pattern for the ES. I mean, we tested down on the tariff noise, and we have come up and we are basically consolidating up here into new highs. So we keep making new highs and falling off. But the one thing you should note as a result here is that we are not coming off. So if new highs were overpriced, then we would come off very quickly. Look at the NQ. NQ, same story, fell off on tariffs, came back, and has pushed new highs and is just not coming off at all. They're holding on to these higher prices. Crude, different story. Crude has, has fallen back into the balance range and is holding on to that balance range much more clear in crude right here. These are my boxes for crude, basically. These are the trade zones, and you could see it has a hard time getting out of this middle zone. We've spent quite a bit of time here. The end of last year, we basically teetered back and forth, and then we broke higher, came back, tested the low end of the zone. You can see the lows here. Tried to break out above the high end of the zone, was unable, tested down, came back, tested from below into the zone, tested again from below into the zone, higher low, beautiful swing long here, higher low here. So this is, this is kind of a classic pattern here. Pull back to resistance, higher low, pull back to resistance, higher low, and an explosive move higher. And now we are back in the zone. So we've had this impulse down in crude and somewhat of a continuation the next day. But I got to tell you, for crude, I didn't find that, I found this consolidation here very much expected, but really the expectation is it would at least reach down into that 61.20, 61.30 area, and it just did not. And instead, it tested up into the upper boundary, and it's holding steady here on top of its monthly VWAP. Just crude, pretty good setups, quite noisy. We have an excess above, excess below. We're in the middle today, expecting crude to just be choppy and inside and kind of grinding traders out today. The S&P, on the other hand, you can see the boxes here in the S&P: balance, imbalance, used to be balance, and then we're forming balance up here. So the S&P transitioning from box to box, crossing that middle box, transitioning from box to box. But again, the S&P is not giving up any territory. When you look at how it's behaving here near the highs, it's just not giving up any territory. Quite bullish in there. Remember, when prices, the market's job is to test for sellers, and it's successfully testing for sellers because every time we go up there, we come right off. So if we look at how it's handling these highs, every time we make a high, we come right off. So we've seen this. Actually, the better chart to show this is the intraday chart. So makes a high right here. This is a new all-time high, comes right off, makes a slightly higher new all-time high, comes off, makes a slightly higher new all-time high, comes off. And that was the key scenario that I put in for Friday Friday, I posted these scenarios didn't do a TraderBite, but posted the plays in the Convergent Market Prep channel, and I talked about the very likely scenario here being gap up and come right back into the prior range, which is right here, and that's basically what it did. So it pushed all the way down and has come up and made a lower high versus Friday's overnight high and is holding steady in here. So we're trading basically right now into the acceptance that we had there before. Very important to kind of know where things are. Here's a better image of this. This is the RTH only market profile chart, and you could see on Friday we opened way up here, big collisions. You could see that kind of dot in there. Let's see if we can make that a little bit more apparent. You see that? I want to see that. I want to see that big collision there and price unable to push higher. And as soon as it started to roll over, then you pull the buy card off the table. You're looking for sell, and you're looking for it to return to Thursday's settlement at least. And what it did is it came back down, filled the single prints from Thursday, and built a B shape. So this is a B shape, a legitimate B shape profile. There is balance demonstrated here with the point of control right on top of settlement in the 32 to 34 area. That's likely to be the magnet this morning. Do you follow that? So you can see high, new high, new high, new high, and they just come right back in. Okay. Any failure from here is likely to come into where the bulk of the volume is, which is demonstrated by this volume profile right here. And so, the target for any push down will be 63.05, 63.03. That would be the area that we would expect the market to test to the downside. Okay. What else is there? Let's see the overnight session. So what is it? What has it done in the overnight session? Really, a nice little try higher, pretty good impulse up. We have an impulse retest fail setup here. You're looking for the break of the cluster, which happened to be to 63.50 for a short back in and towards the prior settlement. Remember, we have the prior settle stat in play today because we are opening inside of the prior range. So we have a historical probability of about 74% or whatever it is, 74, 76%. I don't remember the number because I have it for different products. Historical probability that we would hit this 63.34.75, touch this 63.34.75. Remember, historical probability does not represent what the market will do today. It's just telling us a tendency for the market to want to tag the prior settle when it opens inside of the prior range. So we open inside of the prior range, the market goes back to unchanged, has gone back to unchanged historically 70, 74, 76% of the time. So that's a play. So for today, let me do this. I don't want to do this too short range. For today, what do we have? Let me get my colors. Green for scenario 1. So the expectation today, here's where the energy for this move up started. So that becomes our over-under, or our key over-under zone right here. So this zone that I just colored in becomes really important as a gauge of who wins this battle out of here on the open. What I'm looking for here is a consolidation inside of here until we open up, which is in 10 minutes. looking for it to try to take out the 63.50, but we saw pretty good supply there overnight. Looking for that to fail. I'm looking for a clean, clear opening swing today. We're opening in range, um, basically in balance against the prior all-time high, and then I'm looking for it to come down, hit our prior settle stat, consolidate there a little bit, and then come right back up and balance out. We don't have too much on the docket for today for the ES. There's not much in terms of news or what could drive this thing. So I'm going to be very modest with my expectations, but I'm looking for the overnight stat, which this would look to hold, and then I'm looking for the prior settle stat. The secondary is an attempt through, pushes back down the prior settlement, consolidates, forms a short squeeze, and actually gets our overnight stat in addition to the prior settle. And then we have a lick check above the all-time high for a return and a close into that 63.50 area. These are the two key scenarios. So in either case, I'm expecting a balanced auction coming in. We're opening right up against where we balanced on Thursday. We're opening above Friday's balance, so we kind of have these bookends. So I'm expecting this to be choppy. There's some incentive here for shorts to get aggressive. There's some incentive here for longs to get aggressive. So I don't have a direct bias, but I'm looking for those historical probabilities to play out for the overnight stat, the prior settle stat, and this is what I'm basing these scenarios on. But overall, am I expecting it to run today? Not really a high probability of it running away today. So that's ES. CL, NQ basically the same, except NQ is likely to drive us lower, is likely to be the one that drives us lower. For CL, there's really not much here for the CL to test out. Again, just like we're seeing currently, pretty sideways, choppy kind of environment for CL. The expectation is a poke and a test into the consolidation from last week right down here. I'm looking for it to push into this zone for support, come back in, and just hold steady. Crude does not have much to drive it right now. It's basically in equilibrium. I'm expecting that to continue. The secondary scenario is it takes a quick check of the overnight low, finds buyers, goes to the other side, and then it closes the naked point of control right here, closes prior settlement, and sits in the middle as well. I would love to be wrong. I would love to see these things break and run, but I'm not having a huge expectation that that would happen today. Not really seeing a good driver for this stuff to push. All right, 5 minutes before the close. Again, I want to remind you there's an AMA this Wednesday. Look for a link on my Twitter feed. You can find me at x.com/FutureTrader71. If you're not already following, please do. And I'll shoot the link up there when it's available. Again, the TraderBite is Monday, Wednesday, Friday. Couldn't do one last Friday, but Monday, Wednesday, Friday, you'll find me here at 8 a.m. Central, 9 a.m. Eastern. And of course, I invite you to follow or subscribe to the channel. It's free. Subscribe and set alerts so that when when a broadcast is being done, you will get alerted and you're a part of the conversation. I'll talk to you guys soon. Take care, and we'll catch up on Wednesday. Cheers.